Hi traders and welcome to the Technical Analysis Market Wrap on the 30th of April. So with the month of April pretty much behind us now, we're going to go into the uncharted territory of May where most of the earnings are out of the way and the market really has to stand on its own 2 feet. So it's certainly starting to sit up at some pretty key locations on some of the majors in the currencies and also the indices. So we'll jump straight into the charts and see if we can identify any opportunities for today and early into next week. All right, we'll start here with the Aussie USD. Like I said earlier, a lot of these key pairs are really starting to lock up at a lot of the key zones. You can see here this one has really found itself back at the 78 cent, still hovering in that sort of mid 77s, but it's really caught in this range and it's been here for quite some time. So this is a daily chart. You can see here we've been for about, the best part of 3 weeks now in this very tight zone. Now, it's testing the tops, and you can see that the lines that we've had drawn here for quite some time have been respected right through. The moving averages are still below the price action, so it is trying to bust up, but it hasn't been able to do so, and every day is basically a contradiction of the previous. When you go to the smaller time frames, you can isolate all of the trading opportunities. I mean, the good thing about having these zones is that you can actually get in there and trade the smaller time frame. So you can see here that you had plenty of opportunities to trade the 20 moving average up into that resistance point that is there, and then of course you can see all of the patterns on the way down. It hasn't really given us a hell of a lot, but there was a double top there in the direction of the smaller trend off the highs. It makes it fairly easy trading, but it is still only a scalping opportunity. You've got to scalp in between those two zones. Now again, once we see all this price action, this is very, very big consolidation, right? But when you look at it, if you go out to a weekly chart, you can see what could potentially be a head and shoulders pattern forming if it happens to fall back down below the 76. Now you can see here, that's the left shoulder, the head, and this would be what would a pretty strong right shoulder if it happened to sell off and get below this neckline that would be there. Very, very clear head and shoulders. Now these patterns very rarely happen on such a big time frame that are so clear. So certainly one to watch out for. It could be many days or weeks away, but if it did happen to play out, it could be a very, very strong pattern. And the great thing about this one is if we actually measured it out, we can actually see that the neckline it goes through there. You can take that distance, and that distance will project pretty much to the area that we would fully expect it will get to, which is the next roll reversal zone at around that sort of 73 area. So a really, really good thing to put in your box. I guess one of these patterns like this is something that you actually set and forget, but you need to set an alert that if it does happen to get there, you're well aware of it. A lot of people think that these patterns are all hindsight, but as you can see, this is one that could clearly happen and still a long, long way away from happening. But in saying that, it could get there pretty quickly if we have a bit of a sell-off. So certainly one to keep in mind because it makes a lot of sense from the directional standpoint if it does sell off from this level. It's having a lot of trouble getting past the 78. This is the second time it's come up here now. Even on a weekly chart, you can see the shoulder is forming. Definitely one to keep an eye on. But at this stage, the price action is definitely consolidating around here. If it happens to break up and close above the 78 cent on a daily chart, then of course it looks like it wants to test the 80, and that's more than likely what's going to happen. And if it does that, of course that pattern is no longer there. So one to keep an eye on, but that's how patterns set up, especially on the bigger time frames, and it pays to have a look at them. But for mine at the moment, we just want to be scalping in between these ranges. For the shorter term, scalp between the two ranges of the 78 and the 77. And when those zones get broken, you know where the next take profits are going to be. It's pretty straightforward. Good trading on the Aussie. We'll go over to the US dollar CAD. This one has broken that key support zone that we were talking about last week. You can see now that it's clearly broken that and it's trying to push lower. It's 122.75 or 77 at the moment. You can see if you go to the smaller time frames, look, you can see it's just big sell-offs. There's no real pullback to the 20 moving average. There's just nothing happening here. So realistically, you want to be looking for a reversal on the smaller time frame. Now that it's broken a key zone, I wouldn't be taking a smaller time frame any lower than probably 1 hour for a change of trend. I wouldn't be going to a 15-minute now because I think it's just too the rot's just sort of setting in on this one. So realistically, it's probably going to stop somewhere soon. I don't think it's going to keep selling off without a bit of a retracement, but you wouldn't want to be preempting that. You want to be certainly going for at least a 1 hour change of trend. If you get a series of higher highs and higher lows on a 1 hour chart, then you could potentially trade it up to the moving average at the very least. The 20 moving average on the daily makes a lot of sense. So When they do sell off like this, I think it provides good scalping opportunities back into the moving average, because they will get there eventually. And then what you can do is basically trade the opposite direction of that trade when it gets to the moving average and start to sell off that. So they do provide good scalping opportunities, but you've got to wait for the confirmation, okay? So on a trade like this, you know it's very, very heavily downtrending, so you want to go to a 1 hour and make sure you get a change of trend before you actually try and scalp it to the moving average. Very straightforward trade, but you must get that confirmation on the 1 hour, not a 15-minute, because it's just too far gone to be taking very short and sharp scalps on this one. The next one we'll have a look at is the US dollar yen. So the US dollar yen has been behaving itself pretty well, really. We've seen the test of the 107.80, which we were pretty happy with last week. You can see it's bounced off quite nicely off that, and it's managed to close itself above the 20 moving average on a daily, which is a very positive sign for it. Look, it finds itself at a pretty strong resistance point now. You can see that here, like there's a lot of resistance through this area here and all the way through here. So realistically, it needs to continue on with the job. It hasn't had the pullback that you'd probably want to see before you get involved. So if you missed this initial burst, you could have got it down here. There's no question about that. But if you have missed this burst, what you want to be waiting for is a bit of a pullback. You go to a smaller time frame. It needs to come back to a reasonable level. You can see here that the 4 hour is trying to break through the 200. If we get a pullback to around the sort of 108.50 level, that'll be the 20 moving average on a 4 hour. That will be more than enough information for us to actually see if we can take this long. You've got a series of higher highs and higher lows happening. So you can either do one or two things. You can either play the pullback to the 20, or you can take the break of the 200 there, which will give us a series of high highs and high lows that we want. And that'll hopefully get us to about the 110. That would be the target. The 110, 110.50 would be the target for this one. But it's showing pretty good strong signs that it bounced very, very strongly off that very important zone, but it has got a fair bit of work in front of it. It needs to clear this zone now before we get excited about taking it longer. If it does that and closes above there on a daily, then we can start looking at taking it to the 110 or 110.50. So we'll move over to the dollar index now. This is obviously a very important one for a lot of the currency pairs. It's been in a very strong downtrend. You can see that all the way down. It's been selling off the 20 moving average. It's had a little bit of a pullback now. You can see for the last day's worth of action, really, it's tried to test the 20 moving average from below it. But look, the problem with this is it has to actually do it. We know the 90-90 level is a very strong level for this one, and until it gets up there, it's going to be very hard to take a resurgence seriously. So in that, I don't like jumping on a trend that is starting to actually change. Now you can see that the moving averages are starting to converge on each other because the MACD is telling us that. We can see we're starting to get weakness in the MACD, even though it's making lower lows. So you've got to be really careful when that starts to happen. And, you can see that look, at this stage, I wouldn't be probably looking for the short, but I'd be looking for a long if we get a close above the 20 moving average. This is a 4 hour chart, so you definitely want to see a close above this level here. Ideally, you want to see a change of trend. The 1 hour is trying to do so. It has got like a mini lightning bolt there, but not enough really for me to be excited about this because it's there's too much traffic in front of it still. That's the problem with this one. There's still quite a bit of traffic in front of it with the 20 moving average there, and also with the daily, that 90-90 is right in your face. So it's very hard to take this one long until you get to that 90-90 close on a daily chart. If we get that, I think it'll be a really, really good potential reversal for some of the US dollar base pairs, especially the CAD. So this is one to certainly watch. But at this stage, it's a bit of a wait and see. We need that price to get up there and close above the 90-90 before we take it seriously on a daily chart. Failing that, if it makes a new low again, then we look for the series of lower highs and lower lows again. We can go to a 1 hour and then start looking for those changes of trend again. And probably the 4 hours is probably the one you want to be trading here. If we see weakness again and it gets to that 20 and it's looking weak on a smaller time frame, then potentially look for the shorts back down into the lows here of about 90-30. Difficult one to trade, not a very easy one at the moment, the dollar index, because the expectation is that it's actually going to go long at some point, but it seems to be really floundering at this level. Of course, the opposite of that is the euro. That's gone up in basically a straight line. No real pullbacks to talk about. It's at a very strong resistance point now. We know that. We've got an indecision candle there, which is really highlighted by the fact that the dollar index is having a bit of a resurgence, which shows that weakness through that candle there. this is one to watch. Like the logical trade would be for it to come back down to the 20 and test the 120 level. That would be ideal. Whether we get that or not is going to be dependent on what the dollar index does, of course. But the perfect trade here would be to actually trade this down to the 20 moving average or to the 120 if it comes down aggressively. So we need a change of trend to obviously see that happen. You can go down to probably a 1 hour or 4 hour time frame. Look for the changes of trend. If we had a break of price below here, the 121, you're probably wanting to be looking at a break of the 121 full stop to actually even think about shorting this one. But again, we've got the MACD weakness starting to kick in on the 1 hour. The logical trade is to take it short. I'm not keen on going long on this unless the dollar index breaks lower, of course, and this one needs to go higher. It needs to make a new closed 4 hour high above 121.50. So if that happens, then potentially we could take it long and look for the longer opportunities. But you've got a little bit of trouble around that sort of 121 sort of 80 area. You can see that right through there. So realistically, the distance before it runs into serious trouble is not very far away, but the short is a fair bit easier. You can see here that the real support is going to be about the 120. So probably the better trade is to try and short it. But if you're really keen on the long, just wait for that break, and you need that close before you actually start to take it long. Be mindful that around the 120, 180, there's going to be a fair bit of resistance. All right, the last one we'll have a look at today is gold. We'll go straight on the gold today because this is providing some pretty good trading opportunities, I think. It seems to be, you can see we had the double bottom here on gold. This is a daily chart. It had the lightning bolt effect, which we got. Now it's coming back and testing that same area, that role reversal zone. Extraordinarily important zone. You can see here it was resistance there, support, resistance again, and now it's been support. It's also got the 20 and the 50 moving averages right underneath it. They're all at the same place around that 1765 level. So it's got a lot of support here, being backed up by role reversals and moving averages. And we're also potentially about to get a 20-50 moving average cross, which is actually quite significant and important. So realistically, what you're looking for at this level is a change of trend on a smaller time frame. We know we're flattening out here on the daily. It's had a chance to consolidate. What we want to be doing is going to a 4 hour, and you can see the consolidation happening. You want to see a change of trend on this one. So you basically a series of higher highs and higher lows on a 4 hour or a 1 hour, even to give us a clue. If we get a lightning bolt effect on the 1 hour or the 4 hour and it breaks this zone here, once it breaks to 118, this should be off and running. You can see there's a lot of upside potential to it. Effectively, I think it could go all the way to the 200, really. You can see the next real resistance point for it is around this level here, which is around the 1855, and that coincides with the daily 200 and also a very strong support and resistance level that was there previously. So if we do get the breakout that we need, you can wait for the test of this high. If we get a daily close above this level, so above the 1800, it really opens it up. There's not a lot in front of it all the way up to 1850. So really, really good trading if we get the trade that we want. That's probably the preferred trade on gold. The short doesn't look as good. It needs to do a fair bit of work. It's got a lot of moving averages and resistance and support to break if it's going to get past and short this one. So definitely my preferred trade is the long, but you want to be waiting for a change of trend on a 1 hour from this current level. Or failing that, if you're a longer term trader, wait for a daily break above this level here, and then we can start aiming for the 1850 level. So hope everyone's had a great week's trading. I think there's been some good scalping opportunities. Moves have been reasonable, so I think you should have been able to get some good trades in. Have a great weekend. I look forward to seeing you all next week, which leads us into non-farm payrolls and another interesting week of earnings. Thanks, everyone.